immediately that's something that's not going to go as fast, as smoothly as that. And the parallel that I've been making over the past few weeks in the quarantine of the people of Sarajevo, and then 1425 days of siege, and elements of self-isolation, and the fact that life goes on, and there are always winners and losers in every situation, every circumstance. I think what we've entered now is very much the situation where we would like to be on the winning side. We are not fearful of losing in the process, because I genuinely don't believe that there are failures in life, only the lessons learned. And I think if we join forces and exchange ideas, strategies, experiences, we can create something that has a long-term impact. And I think that was the birth of Mayfair Investment Club came as a result of many, many years of working between the world of investment, entrepreneurship, policy making, lobbying, and the fact that I always knew in the times of crisis and times of embargoes and sanctions, they always present huge, huge opportunities to actually win deals, to win business, and to also better your investment position that you believe to have had a really good position before a crisis. So, the premise and the purpose of us joining forces in the sort of attempt to create a club that isn't a fund, that is a place, a meeting place of like-minded individuals who, instead of wanting to set up their own businesses or go and work for investment banks in the city, or even their family offices back home or in the UK, we really want to nurture and guide and guard the investors of tomorrow. So those who are interested in learning the ropes and the sort of the industry knowledge when it comes down to becoming investors rather than anything else. And there's a process to that. We'd like to do it in a very constructive way by inviting the right mindsets to join us. We want the club to be very international and global, because we're really looking at the current students and recent graduates from the likes of the London Business School, Regents, UCL, King's, Imperial, Cass, Oxford and Cambridge, where we feel in the actual fact the club's kind of longer term impact is also to build the leaders of tomorrow. I tend to work a lot between Washington, London, Brussels, and the Balkans, and I understand the way in which certain policy making sort of elements are really brought to the attention of the public later on in that process. So by really understanding the world in which we live, the current world order, and perhaps the new world order that's being created off the back of the COVID-19, we want to create a sort of a melting pot of great individuals that will join, as well as the great experience and grey hair that is offered through our board and our investment committee and all the other sort of people and the networks we have, and ensure whoever ends up working closely with us will have the confidence that they will be and their interests will be looked after. So that was the basic premise of the Mayfair Investment Club, and the foundation that we're building in parallel is something that I'm particularly interested and excited about, because we really want to build a sort of a strong social impact component of the club, where we really kind of delve deep into the United Nations 17 development goals, sustainable development goals, in order to make a positive impact on the society. So I will now hand it over to Chris Gooding, that I've known for some time now, and I've done business with, and I hold in sort of high regard, largely because he's got a really interesting and colorful professional experience and personal experience, very much suited to where we are today and where we're going to be in the next 6, 12 to 18 months. And I think Chris will then hand it back to me, so I'll introduce Andreas for the second part of this first part. So Chris, over to you.
Thanks very much, Samir, and welcome to everybody. This is primarily a webinar about risk, about investment in times of crisis. As you probably know, you must know some lawyers, we all have some misfortune in our lives, that lawyers loathe risk. They steer away from risk in the same way that you would steer away from somebody inviting you voluntarily to catch CV. It is therefore rather strange that I live in a world of extreme risk. I specialize in political risk, and people ask what that means, and actually they ask me a lot less what it means since Brexit. But what it has meant for me is that I've worked in, around, and rebuilding after. I totted it up today, I think 13 wars, including representing Kuwait, right the way through the invasion and out the other side into the rebuilding. That was 23 years of my life. 12 regime changes, 9/11, the whole of the Arab Spring, because my specialist area tends to be in the Middle East, and a whole raft of terrorist experiences, including 9/11. I also am an entrepreneur. I created from concept a hedge fund which attracted 500 million in 2.5 years. In the early well, the late 90s actually, when that was quite a lot of money. I guess it probably still is. I've also run startup airlines, startup B2B trading platforms, and I build hotels in an emerging market for fun in my spare time. So I live in a rather strange and bewildering world for a lawyer, where the law has normally ceased to exist. There are no laws, there are no rules, there are definitely no algorithms that fit, and you end up finding solutions to problems on a very practical and a very pragmatic basis. I'm always the one in the empty plane, well, metaphorically and very often literally in the empty plane heading out to an airport which is crammed with people trying to get out. That tends to be what my life has consisted of. So this is an observation on investment from someone who's built portfolios from scratch, but more to the point has had to watch countries destruct, normally self-destruct, and watched the international community and the internal community rebuild those countries and their internal commercial affairs. So there are about 3 or 4 major points I want to make, and these may not fit your algorithmic matrices, but the circumstances we're in do not. And I think it's important to use the experience that's on this team and on the panel today, but on the team wider, and recognize the fact that we've been there, we've done that, and we've definitely got the t-shirt. The first is that I think everybody who's got any drive in their lives is brought up on a don't stand there, do something basis. All the Marvel comic heroes are always seen running far hard at the action. Jack Bogle, who was the founder of Vanguard Investments, famously said in the height of the financial crisis, don't do something, just stand there. And for those A-type personalities, it's probably the most difficult thing that experience tells you, is that sometimes you can't do anything, so don't do anything. Stand there, reflect, study the situation, watch what's going on, and then react. And I think what happened in the financial crisis, which if you remember happened during the summer period when they were younger and slightly less grey, slightly less grey-haired people in charge of the trading rooms, is panic set in. Everybody believed, got to do something, so do it, like sell. And sometimes nothing is the best to do. If you are able to spot the crash coming, then you're probably a millionaire already. If you could see exactly how deep the market is going to go, was going to go, has still to go, and I've already seen one question about, is the US stock exchange going to drop any further? How the hell do we know? The answer may well be that if you're going to be selling out, you almost certainly will sell out at the bottom of the market. If you stay put, the market will drop further. That is the primary law of Dr. Sod. That's what happens. The next point that I think is worth making is that loan markets are the time to buy. And I find myself, from an investment point of view, asking at these times in particular, what would Warren Buffett do? Well, Warren Buffett has a war chest, reputedly, of $128 billion in cash, which he keeps as a nest egg for exactly these moments. What has he done in March? In the last 2 weeks, he's raised $2.4 billion more on the equity markets. He's ready to spend. So it is an opportunity to buy, but you've got to have the cash to spend at that point. If you haven't got the cash, very often selling out at the bottom of the market is going to be the absolute worst thing to do. And the other thing that I've realized, having traveled around the world to all these countries in ruin, is somebody's making money. There's always somebody out there who is making money. And they aren't just the arms dealers, the scalpers, and the bootleggers. They're the conventional companies that provide what everybody needs all the time. They're the safe stocks. They're the Warren Buffett stocks, if you like, although it became a bit of a cropper on American Airlines, but still. But it is possible to have a good war, a good crisis, because the people that survive in the crises and should be backed going forward are those that have the resilience and the flexibility to be able to survive in a crisis. And I'm just checking my timing. Another point, which I think is equally important, is when it comes to a crisis, very often we know, not as investors, not as analysts, not as economists, we know what the world needs at that particular time. And an interesting sidebar point is that I was always fascinated during the Iraq War and the subsequent travails that Iraq has gone through, particularly with the ISIS situation, and replicated in Libya during the civil war there, that all the phone masks were still standing. And I asked one of my security chums, you know, in the old days, the first thing you did was, when you were having a revolution, was seize the telephone exchange. Why don't they blow up all the telephone masks? And he pointed out, of course, that whilst sophisticated armies are all operating on battlefield comms equipment, actually ISIS survived the entire Iraq campaign, communicating with each other on burner phones. Who was making the money out of that? Yeah, our old friends, Hutchinson, Vodafone, all the players in the telecoms industry. So I had a little bet with myself this morning, and sat down and thought up, just looking around the room, which stocks I'd buy at the moment. And I came up with Disney, Netflix, UPS, and Ocado. Oh, and Domino's, mainly because it's all I seem to see go past my door at the moment is the Domino's delivery lanes. All of those have had, and I did it without looking at whether I'd buy them. I just did it on a consumer looking around his house and wondering what was going to improve during the crisis. And sure enough, some of them have had less fantastic results than others over the year, but all of them have gained in March. Netflix has gone up from 350 to 450 in March. UPS went up 10% in the last 5 days, based on its exclusive with Amazon. Ocado is 40% up on the year. So it isn't all doom and gloom. There are stocks, of course, you wished you weren't in. As I've mentioned, Warren Buffett owns an awful lot of American Airlines, which must feel like a bit of a mistake right this minute. You'd stay away from car manufacturers. And in fact, I'd stay away from anything in aviation because you've got to be mad to invest in it in the first place. The surprise, and this is just a comment, and for those of you who are thinking about your final year thesis, you could do worse than pick this one as a subject. The surprise is gold. Why hasn't gold shot up? It's the first time it hasn't in these circumstances. If there's anything that is unusual about this crisis from an investment point of view and unique about it is gold. And sorry, of course, the other investment that one should be looking at is healthcare providers and healthcare services providers. So there are just some, maybe rather folksy, but born of experience aspects of crises generally. And I'd like to finish with a man that probably knows nothing about investment, but he did manage to raise 18 million in a week, which is probably more than most of us entrepreneurs have done. Captain Tom. And this is an important message to those who haven't lived through crises before, who are panicking. You've got to remember, we will get through it in the end. It may take time, but at the end of the day, we'll be okay. To all those finding it difficult, the sun will shine on you again. The clouds will go away. Thanks, Captain Tom.
Thank you, Chris. That was very, very insightful. And you and I had many, many conversations on the individual experiences in the areas of crisis. And in a way, I think we've both become accustomed to it. And I remember giving various talks at universities about the a fear embracing exercise. How do you, in the difficult circumstances, what do you do when the fear kicks in, just like when the panic kicks in when it comes down to the market. So that was great. Thank you so much. So I'm glad to now hand over to Andreas, who will really give the audience out there kind of his own take, his own experience, his own pointers and directions without being, I would say, too specific in that sense, because that's not the point of today's session. And then we're really looking forward to opening this up to the floor and Tatiana to start getting some interesting questions from the rest of the audience. So Andreas, over to you.
Thank you, Samir, and thanks to the Mayfair Investment Club to bring us all together. I think that's a great occasion to share our thoughts. Just a couple of words about myself. I worked more than 20 years in the financial industry, mainly for big banks. I worked more than 10 years for Merrill Lynch, and then for Pictet in London. And then I moved to Asia to join Bank of Singapore, which was a role based in Singapore, which was a great experience. I learned a lot about the Asian markets there. And then I managed money independently during my EMBA with having Asians as well as European clients. At the moment, I'm the managing director of Future Advisors in London. We are a global private equity firm that is also involved in wealth management and asset management, with offices in Singapore and headquartered in Dubai. So most of my colleagues are sitting in Dubai. Yeah, what we do, we advise our clients on private equity investments and wealth management and asset management. At the moment, of course, they are unique in this unique crisis where you've seen oil collapsing like it hasn't been collapsing since a long time. There are, of course, in the Middle East, unique opportunities, which my colleagues over there could probably tell you more about it. The oversee private equity investments as well as funds like Middle Eastern bond funds, which of course all gets at the moment beaten down, but which offers great opportunities for fresh money in the future. In other interesting markets we follow and help our clients with are obviously also metal market, right? Chris already mentioned gold before. I still remember the time when I was in Singapore and I discussed with a client gold and the metals, and there was just a store opening of a German company where you could buy physical gold in all kind of shape and sizes and all kind of metals. So we went there, met the managing director who opened the shop, and we told him about our thoughts and what we think could happen in the next couple of years. So yeah, we bought a lot of physical gold, silver, and a little bit of platinum, but mostly in bars. And the client liked me to help him to distribute it to different locations in Singapore, because he said, you know, down the road, I'm sure we see a crisis and one needs maybe to have access to these kind of metals. Funny enough, I had advised him at the time to also invest in coins, which he didn't want to do because of the small size. But as you can see now, I mean, in crisis like this, it's much more if you travel a lot, or at the moment people are maybe a lot less traveling, but they're maybe stuck somewhere. So it's very good to have smaller sizes of coins. So he came back to me recently and I inquired with a similar or the same shops over here in Europe. And the extraordinary thing is, who would have thought about that? All the coins, especially the gold coins, are sold out due to the current situation, yeah. So the premiums suddenly exploded, like it often happens if too many people want the same things. So instead of a spread of 2 to 3% in these coins, the spread is suddenly at 10%. And due to the Corona crisis, mines are and shut down, and Switzerland and South Africa, they are all not delivering any more metal, so any more gold bullions or also the coins. Yeah, it just shows you that one always has to prepare in advance, because once the crisis is there, it's often too late. Yeah, as you see, when the crisis started in London, what no one probably of our generation has ever seen in the West, especially the big run on the supermarkets, and main ingredients like pasta, rice, quinoa, lentils, and all these kind of things are sold out in the supermarkets. Chris mentioned before Ocado, right? Ocado, which was a stock that really never really performed well. And they suddenly are 10 times oversubscribed. And I got an email from them, they can't deliver anymore because so many people want delivery slots. The same with the supermarkets, all the delivery slots are booked out. Yeah. So it just shows once the crisis hits, it's usually too late to act, right? If it's for financial markets participants, the traders in the banks or the portfolio managers or the wealth managers like myself, if you try to protect the portfolio of your clients now with buying options, it's very difficult because it's very expensive and the premiums are very high. So it just shows you that often you've got to think a little bit ahead of the crowd. Like I had this discussion with this client of mine who wanted to stock up on gold at the time. But the question for everyone is also now at the moment, I guess, you know, what is more important, having a lot of gold distributed or access to food, right? Because we all really don't know what is happening, and a lot of people are worried about supply chains are breaking down, which you see in locations that are a little bit more remote. You see already in the UK, there's a little bit more panic about that than probably in smaller towns in Germany, where the supermarkets have plenty of foods and there are more farmers around and no one panics. Yeah? But this is just unique about every crisis. I still remember when I started working, it was the internet bubble that wasn't that bad compared to the financial crisis, right? And in the financial crisis, at the beginning, it impacted more the financial sector and the people in it, and the panic in the markets and everything, and the people have been invested, and the real economy only later down the road. In this crisis, it's a little bit something no one has ever seen before, and it affects actually everyone. And the people who live from paycheck to paycheck, they are hit probably the hardest, as you can see on the news in the US, how the kilometers of queues of cars trying to get to the food banks because people don't have the money to buy food. Yeah, so that's probably something that has never been there before in the Western world when there was no war. That something like this is happening. Yeah. And yeah, and the financial markets are, of course, affected as well badly. We've seen the first big sell-off. And then, as we've seen already in the financial crisis before, the Federal Reserve came to the rescue and is pumping trillions of dollars into the markets, buying up not only treasury bonds, but nowadays also junk bonds and equities, which is obviously now, which one can see in the markets, is strongly supporting the markets. Yeah, today, most people are probably surprised in the last couple of days when they checked the stock market, what is happening, but we are going, we're having a very strong bear market rally or rebound, whatever you want to call it. And yeah, it's indeed very interesting times. We have obviously to see what will happen when now the earnings are coming out and the real economy, the earnings and everything is catching up more and more. And the market will probably then see reality as well, right? It's then just a matter of how much the Federal Reserve and the central banks around the world are going to intervene and support the markets with trillions of dollars in liquidity. But obviously, like in every market, I mean, like Chris mentioned before, you can either stand aside, which is probably better for everyone's nerves, and see what is happening and let the market unfold, whatever we're going to see going down the road. Or there are obviously also nowadays a lot of day traders and people who use the volatility in the market to their advantage, yeah, because option premiums are huge. So if you're an option seller, you have spread trading strategies, you can benefit from this market hugely. Same, obviously, as junk bonds are beaten down, which are rebounding now, the same as the stock market. And as well, emerging market currencies came strongly under pressure. Yields were rising because when liquidity goes out of the market, emerging markets are usually the first one hit with their currencies. Most people flee into the US dollar, Swiss franc, and Japanese yen, which is a safe haven and a risk off trade. And emerging market currencies are being sold off heavily, which down the road for sure offers huge opportunities once yields rise to higher levels. We can see it already in Turkey, where you get yields of around 15%, depending on the maturity, in bonds that are issued by the World Bank, which reduces your default risk, obviously. And you see that in many other emerging markets happening as well. And probably down the road, depending on how this crisis develops, you will see more opportunities like this and more currencies getting crushed by this market and by the shortage of liquidity in more the niche emerging markets. In the stock markets, of course, you're also seeing plenty of opportunities in the pharma and biotech shares, which a lot of people are speculating on. But it's, in my opinion, of course, more speculation because you also don't know who will win the race. Companies that are benefiting, which are probably the clear winner are the home entertainment companies or the Zoom, what we are currently using. And yeah, and the private equity space where our firm is active as well is a very interesting market now, because a lot of small companies for who we raise capital and who we support, and companies that we manage, are also looking for investors to join in to raise the liquidity level to use these times for further acquisition and help out other companies in the market that need the liquidity and support, yeah, who we can help and support. So I think it's a wise thing to sit on a lot of cash at the moment, so one has plenty of time now to think about where the opportunities are and deploy the money into the markets where one feels comfortable in. I'm sure also in the property market, there will be a lot of interesting opportunities and activities down the road, which probably will take some more time and are probably the last domino to fall if it falls. Yeah.
Great. Thank you, Andreas. Very insightful. As you've probably now heard, the three of us on the panel today have got very, very different backgrounds. But what really brings us together is the fact that we feel comfortable, dare I say, in the times of crisis. You know, there is that element of almost being able to say, I've lived through enough COVID-19s in different formats and in different, dressed up in different sort of attire, that we really know how, where the opportunities lie and how we could actually benefit from it and also achieve elements of social impact. I'm going to hand it over to Tatiana now, because I can see there's lots of questions for Chris and Andreas in particular, and I'd kind of probably like Tatiana to kick off possibly the questions that are coming at the very end, and we can work our way through. As Tatiana said, we won't be able to answer all the questions. We'll try in the follow-up email as a thank you to all of you who have attended and signed up to actually try and pick out the answers and send you some more information. So Tatiana, over to you.
Thank you very much. Thank you, Samir. Thank you, Chris, and thank you, Andreas. We are trying to select questions together with my assistants right now. It's kind of like it's coming more and more. And actually, we was going to ask you, Samir, the first question. To be honest, that was our common decision. If you don't mind, it's about: is it the right time to invest in new markets or new services in the same market? That was a question for you.
Yes, I saw that question coming up. I mean, it is the right time to invest. I mean, I know Andreas and Chris both said it's important to sit back, but you have to know who you're investing in and with. So you've got to be able to pick both in new markets and in new services are going to be winners and losers. And there is, if we had a magic wand, then we'd all, as Chris said, be millionaires or billionaires. So you have to do a great deal of due diligence. You've got to have a really knowledgeable people around you. I mean, you can try and do yourself and go to markets, but, you know, we've all done it. You know, sometimes we think we can outperform the guys who do it day in and day out, but I wouldn't advise people to do that unless they're prepared to lose the money they're putting in. And in general, sort of advice, sort of investment advice is that there are no guarantees in your returns. You've got to be comfortable with what you're putting in, and you've got to really, at the point of what we're trying to make here with the Mayfair Investment Club, is that it's a journey. You know, you want to become a successful investor, you've got to embark on a journey. You've got to actually go with the people who not only are great fund managers, and they only do that day in and day out, but also the people who have walked the walk and talked the talk. And Chris often talks about sailing through the sort of oceans in January of the year rather than during the summer term. And that's really kind of what's going to define, I think, the future winners and the future losers. You guys who are out there looking to actively invest have got to really align yourself with the people who know what they're doing, who have the track record, who have invested well, or you can try and guess the market, but I wouldn't necessarily advise it.
Thank you, Samir. And I will move to Chris right now, because we have 3 different questions, but related to one topic about the healthcare to you, Chris. So Let me, from Anne Duncan. So I'd be keen to hear your views on the investment opportunities in healthcare sector in Europe, telehealth, home health, and how we can position ourselves for roles in that space. For years, we've known digital transformation was needed, but the difficulties encountered have made that slow. EHR system, etc. Thank you. And I will just continue with Mohammed asked, how do you see the investment in healthcare assets business after COVID-19? Do you see more will be the telehealth or tertiary care facilities in the Middle East? And the last question, sorry, it's again from Mohammed. What happened before with Abrash and now with NMC? How do you see the healthcare investment funds in GCC? Sorry, it was a lot, but just can you pick up some points from it? I'll unmute you. Sorry.
Need to unmute. Ahlan wa salam, Mohammed. Thank you for your questions. The healthcare sector is in a very interesting place at the moment. It would appear to be an extremely good place to invest because we're getting, because it's in the front center of the news. But to a large extent, the public health elements of this have already geared up to do what they needed to do. I think what will be very interesting at the public healthcare end of things, and that obviously in the States and more in the Gulf as well, are going to in fact be private suppliers, but filling the space of a public healthcare system. It will be interesting to see how they adapt after the pressure that's been put on them. Your questions about the Gulf are interesting because I spent a lot of time on, I think I launched one of the first health insurance programs in Saudi Arabia at a time when there was religious doubt about whether it was allowed at all. So what I think is going to be interesting is that there haven't been that many cases around the Middle East, particularly in comparison to MERS and to SARS, which hit the Middle East and particularly Mecca more heavily than anywhere else. I think there will be a move within the Gulf, around the world, to understanding the need for a strong public health system, no matter how much of that system is staffed and provided by private suppliers. But what's interesting, and I'm a great Motley Fool fanatic, I always like seeing what the Fool has to say. All their healthcare picks at the moment are related to robotic surgery and high-tech delivery systems for newly developed drugs. Then nobody at the moment is talking about investing in big healthcare. I think the jury is still out. I think there's great value to be had in, and I particularly like the robotic surgery growth potential, and particularly in the Gulf, where frankly, some of the healthcare leaves still an awful lot to be desired, despite the amount of money thrown at it. The idea of being operated on robotically from London or Miami or Los Angeles, whilst lying on a slab in Dubai, may well be a major factor in healthcare in the Middle East going forward.
Thank you very much. And then we're going to questions to all panelists, just like pick up the question if you feel necessary. So what is the technology investment portfolio looking at this moment? So like, as you mentioned robotics, so what else?
Yeah, I wouldn't pretend to be an expert in the healthcare, although as I say, I've spent a lot of time in the Middle East around and about healthcare. I'm obviously, whoever comes up with first with the drug that solves our coronavirus problem, you're going to wish you had stocks. By the time it's announced, it'll be too late. So, but that is the sort of gamble that, as private investors, falls into the category that that Samir was talking about. In don't try and beat the professionals. I do think Samir's got a very important point to make there, and it comes to this question: what areas should we be investing in at the moment? And again, I've got to say it: sitting back and waiting before you invest is important, and it's important because if you saw a herd shifting towards exotic metals, for example, unobtainiums, by the time you've watched the herd go past your window, it's too late. So the chances of you finding the stunning new exciting stock or the exciting new investment at this stage in a crisis is unlikely without a lot of professional help and expertise. And I think that's the simple answer that Samir is trying to stress out of today's webinar is, trying to beat the markets when in these sorts of circumstances requires steady hand, steady nerves, and a big pot of money to spend.
Thank you, Chris. So the next question is to Andreas from Salman. To what extent are PMW advisors affected by COVID-19?
Private wealth advisors, how they are affected. Yeah, we are probably in the lucky position that we can work from anywhere and we can speak to our clients over the phone or video call. So we are actually in a very good position. Of course, these times are obviously more stressful because volatility is a lot higher. You always have to look actually back to the mandate and focus on what the mandate is, especially if it's a conservative portfolio, because the market is very volatile and there are a lot of risks, and whatever you do now, there are a lot of risk involved. So I think generally it is good to have a lot of cash, or to, one has seen already months ago and even longer time ago that the market, that the valuations are very high on the stock market side. Everyone was also rushing into junk bonds. And yeah, either one has stop losses for his stock positions in there or watches out. And once the crisis starts, one obviously has to pull the plug and sell some of the positions in order to create liquidity for your clients, because you especially now you don't know where the market is going. There could be another leg down. Obviously, the liquidity created this massive rally now. If everything is going to open up now again, and a lot of governments decide, okay, we are going back to normal, probably we'll see another rally, but we don't know what's happening down the road. Number one, earnings could be catastrophic. Number two, we could see, like a lot of experts are talking about, we could see a second wave of the virus. Yeah. So I personally wouldn't be surprised if we see another leg down. At the moment, short term, obviously we have, there's a lot of momentum by the liquidity and also short covering, and people are speculating on this wave up now, also from a technical perspective.
Thank you, Andreas. So regarding the second wave, and particularly in US, there is a question to all panelists. Do you think that US stock market will fall further, or do you think the bottom is already behind?
I'll just get my crystal ball out for a moment.
Could I just say, the question on the technology platforms and investment that Chris answered early on, and I agree with him. We have no idea. I mean, we know that Warren Buffett recently just investing into Goldman's, and we also know that the actual banks, the Wall Street banks, are going to be okay. The rest we don't really know, and we shouldn't even dare to predict that. But in terms of technology, I'm sort of getting more and more information that fintechs are doing really well. I think with the China sort of launch of digital currency and their kind of blockchain platforms, we're going to be seeing more and more winners in that world, and I think more and more unicorns in that world, and especially fintechs that deal a lot with the business type platforms that will allow, especially think of a lockdown and the fact that now supermarkets aren't even accepting cash anymore. So that this could also be a sort of heaven-made opportunity for many technology platforms that will work both on B2B and B2C kind of levels. So I would definitely like to encourage people to look more in that direction when it comes down to the opportunities and the investments, but not so much in the startup. I think if you're looking to invest your money, and this is something that we will do at the club level, we with an exception of the startups with the founders that have 2 or 3 successful exits, we'll really be looking at Series A, B, and C, sort of a high growth company that we have almost vetted through the system of a huge amount of due diligence and digging into the balance sheets and going beyond by understanding the vision of the founders and the management board in order to pick who we believe would potentially be the future winners. So that's me on that front. Maybe Andreas can say what he thinks on banks' share prices and how they'll perform.
Yeah, I think banks will generally be under pressure. So I would be very careful with the bank shares, to be perfectly honest, at the moment. I mean, looking at the multinational oil companies and oil services companies, they funny enough remind me of the banks at the beginning of the financial crisis. They look very attractive because they've been falling a lot and show a huge dividend. I guess the dividend will be massively cut. And as you saw in the last couple of days, oil prices came further under pressure, even after the Russians and the OPEC were meeting, discussing cutting oil production. Again, it plays out like what is happening to this crisis, how soon is the lockdown over? But at the moment, all storage facilities are full. There are hardly any more storage places, which will obviously, I'm not an expert here on oil prices, right? But one thing is for sure, this will cause a massive pressure on oil prices, which affects a large part of the economy, especially in the US. So oil services company and the multinationals, BP, Royal Dutch Shell, or ExxonMobil, it all looks super attractive, especially dividend yields and at these levels. But if I can remind you, the banks looked exactly the same at the beginning of the financial crisis. So I would be very cautious on them. I think it's more the companies we didn't care about in the past, right? It's like, and also people have to reinvent their life and their business. In these kind of companies, what I mentioned before, the Ocado, the online shopping company in the UK. We are big in education, invested our firm. We have private equity companies in education. I think a lot of the education will move online, right? So I think the companies who are the most flexible and the first ones to move here are the beneficiaries. Because according to a study of the Harvard University, they say we will have social distancing until 2022. I mean, if this is true, the classes will be smaller and we have to move to online education. Yeah. So I think there are massive opportunities for the people who can see it and for the companies who can reinvent themselves in a fast space. Yeah.
I'd just add, I think this is a time for pound cost averaging. The idea that you're going to be able to spot the winners and not suffer some losers during this period means that your drip feed approach to investment, if ever it were to be true, and for me it's always should be true for non-corporate investors, it is the time for pound cost averaging.
And could I just add to what Andreas said, the ed tech? I read somewhere yesterday that most of the American universities have announced that coming back to campuses will not now happen until the spring term of 2021. So basically, they're already skipping the autumn 2020 term. And absolutely, I think that the crisis, so to speak, and coming down to call it the normality after this, will probably take more 12 months sort of mark from where we are now. And there will be sort of the way in which we learn to live after COVID-19 will be very different to how we're living right now. So one's got to look at all this in a slightly more holistic way rather than just understanding a particular elements of it. Andreas, you wanted to say something as well.
Yeah, I mean, for people who invest for the long term, obviously, it's probably the first good entry point. And then one can also protect a little bit the positions via covered call writing, which I think is a very useful long-term strategy. Chris just mentioned averaging down. Yeah, I think one probably has to go in steps, right? It's always the best strategy because we can't call the bottom. And I think it's more than ever important at the moment either to choose companies that benefit from this crisis or who are flexible enough to reinvent themselves. Yeah. Also, I think the boring companies that that fill the shelves in our supermarkets, like the Nestle or the Unilever or the Reckitt Benckiser, these kind of companies, I think, are interesting in the long term. Yeah, because as people stay at home, they are also the beneficiaries. And if you use their dividend yield and sell calls on it with a covered call writing strategy, you can at least generate an income while this market might take some time to recover or even goes a lot further down, right? I wouldn't be surprised if we see a massive second leg down, to be perfectly honest, yeah. But no one obviously knows that, yeah, but I wouldn't be surprised.
Thank you, Andreas. So I will start to mix and match some questions because we don't have that much time. So the question from Omar is the second part of his question, but I think I will just address it. Do you see consumer behaviors changing permanently with regards to travel, luxury, shopping, etc.? Burberry, LVMH, Kering. So I will address it to Samir, I guess.
Let me just
While you're thinking about that, I got sent the first picture of the Louis Vuitton face mask this morning.
Really?
An essential bit of fashionista kit.
But I think
I definitely think that there's going to be the kind of consumer change towards the luxury, and it's great to see big brands like Burberry coming into these difficult times and helping the NHS in particular in the UK as they're lacking all sorts of equipment, especially the things to wear. And I think this kind of element of, again, coming back to the social impact and in a way feeling and sort of the pain of the people on the streets and the sort of society at large will define the winners and losers. And of course, the fashion companies such as LVMH are very, very quick to set new trends. And I think one of the new trends is going to be very much the mask, which, to be honest, might even address some cultural issues out there between the kind of West and the East, where if the mask becomes the new kind of it thing that the young kids and the new generation wears, it might kind of help us becoming more tolerant towards each other. And I think what I spoke to Cornelia Mayer yesterday about the kind of her views on the globalization of it, and she reckons, and I kind of agree with her, that after COVID-19 we're going to have a lot less globalized world and a lot more regional world, because the countries and the regions have now learned to be able to or have to self-produce and self-sustain and collaborate more, even if they had huge differences in political issues. They're actually forced to work alongside each other, together with each other, and also activate the produce from within their own country and their own land. So I personally think we'll see lots of positives here. I think the world will be very different. I think the fashion world always finds the way to reinvent itself. And the brands like Burberry have gone amongst the first ones to online sort of consumer behavior. They've designed their stores to traffic online and use technology platforms. So these guys are incredibly well suited to what's happening right now, because they were ahead of the game anyhow. So I think I would definitely back Burberry as potentially one major winner of the COVID-19.
Yeah, I would worry about Prada, who were the last company who actually went online, So, but yeah, Burberry is good. So the next question, small question is, do low-cost airlines look exciting? EasyJet, Ryanair, decrease?
Yes, I think I could see that one swinging my way, or not flying my way anyway, which is what it's not doing. I've been very intimately involved in EasyJet and its financing and its leasing programs. I think, and I've got to be a bit careful about it, but we have grown used to very, very cheap aviation. We're going to have to grow used to expensive aviation again for as long as distancing lasts. Because if you're operating every single flight only 2/3 full at maximum, that's going to be a real problem. Whether the airline's profitability margins can be maintained over that, probably not. An awful lot of the models of these airlines were built around regional, what's a polite word for it? Incentives to fly to regional airports that made no sense for them to fly to otherwise than for the incentives. Those, of course, have been knocked out under the WTO guidelines. And I think what is happening at the moment, and I'm sort of smack in the middle of all this, is that it's what I call the Arabic revolving door problem, that sort of everybody says, no, please, after you, after you, after you, and then everybody gets wedged in the door at the same time. The leasing companies, the engine manufacturers, and particularly Boeing, who are in a dangerous position after the 737, the MAX disasters, they're all biding their time. They're clearly dealing with airlines that can't pay them. Their finance and their lease payments are not going to be made, not in this year, probably not in next year. And the question is whether they've got the courage, and who's got the courage first, to put one of the airlines under. And I think there is another element to this about this is not, anybody who reads the Red Box blog from the Times will know the expression, this is not normal. Actually, what I guess I was trying to say in my speech and probably didn't get round to it is, yeah, it is normal. What's going on at the moment is not extraordinary. It's not, I mean, it is extraordinary. It's much more global than we've seen for a long time, but it's just another crisis. And the dynamics are those of crises. And I was watching a film the other night about the forest fires in both California and in Australia. And the point was being made very, very forcefully there, that this is natural. Lightning-based fires have been going on since time began, and there are large amounts of the natural growth, natural organic growth, that requires a forest fire every so often. And at one level, if you're looking at this big picture, if you're trying to step back 10 to 20 years forward and look back at this point, these crises and these crashes do allow new wood to come through. It does allow new growth to come through, and it clears out the old wood that shouldn't be there. So, I think it was interesting that Nassib mentioned Burberry, because Burberry have actually won. Everybody's got Burberry on their mouth, on the tip of their tongue at the moment, as being a company that showed social responsibility. Not something that, frankly, the fashion industry is greatly noted for. And they're going to be a winner. Those are the sort of companies that I suppose when I was saying, we can all spot the winners coming through here. There are companies which react well to a crisis. There are companies that can create a new oxygen mask in 3 weeks, new oxygen device in 3 weeks. Well, you'd put your money with them, wouldn't you, to be nimble on their feet in a difficult market. That's where you'd put your money. And that's, I suppose, what I meant about we've all got knowledge within ourselves by reading the papers, by watching the TV, by carrying out our ordinary life as to what we ought to be investing in.
Thank you, Chris. And I think we will get the last question. Unfortunately, we have much more, but we are running out of time. What will be the impact on private equity? Will funds become very active soon to buy up cheap assets? That's the question from anonymous attendee. So, Andreas.
Yeah, I mean, I think it will definitely be a great opportunity for private equity funds to start buying up companies soon, because everyone is looking in this crisis, like in many crises, for liquidity and need to be team up or need support or need to be bought out. So that's the big time for private equity, especially the ones who are sitting on a lot of cash and who are able to raise more capital in the current situation.
Thank you. Thank you very much. Anything to add, Chris, Samir?
Could I just add, I mean, I agree with Andreas, I won't go on that, but let's maybe have the last sort of 30 seconds of final remarks. I mean, I see this crisis as a sort of an opportunity rather than something that is going to demolish everything we've built for over the past many years, because I often hear these sort of scaremongering stories that I've worked incredibly hard for the last 10 years and now everything's going to disappear. Nothing's going to disappear. We have to, I remember talking to Professor Grayling, one of the greatest philosophers, and asking what are the 2 key skills we ought to possess in the 21st century to succeed. And he said, Samir, it's adaptability and thinking outside the box. We have to have, this is the mindset thing. This is the actually more of the attitude towards the crisis than it is actually the crisis in itself. One has to look at where and how they can benefit from it. It isn't a war, as many are portraying it to be, the war against a sort of unseen enemy, because for those that have gone through the war and for those who have lost their lives by going to buy a loaf of bread or going to buy milk or get some water, were shot by a sniper or a grenade, that's a war situation. And even in those situations, we get up and we go after what we need to do, and sort of everyday life becomes a normality. This is a new normality, which is really, in my view, getting us closer together. We tend to be spending more time with those that we've neglected. So we have to look at it positively. From the investment viewpoint, there's going to be opportunity after opportunity after opportunity. And we want to be positively aggressive in this moment rather than putting things on hold. We're really kind of pushing through the concept of the creation of the club, of the interaction with the like-minded people, on the exchange of ideas and strategies in the attempt to create new knowledge, new strategic viewpoints and new opportunities. And this is very much what drives me in these difficult times, which, as I said, I've kind of accustomed myself to by the mere nature that what was a tragedy 30 years ago for me, of having to flee my own country during the Yugoslav war, has also been something that has strengthened my character and made me the person who I am today, with no fears but a calculated risk approach to opportunities that are out there. So I'd love to get Chris and Andreas to say their kind of final sort of views, and we can say goodbye. Chris.
Thanks, Samir. And I do think that that point, I remember talking to you about 3 weeks ago about queuing for the supermarket, and you said at least you haven't got a sniper waiting for you. But actually at one level with coronavirus, maybe you have. I think this is a good time. I think it's a good time for, at a personal level and at an investment level, to sit back, think, and have the space to think, which we very rarely do, knowing that, frankly, whatever you do at the moment isn't going to make very much difference anyway. So spend the time usefully. Spend the time building your knowledge. Spend time thinking about what you actually want to achieve in the investment area, and spend time on yourself, because life doesn't allow for that very often. The more we think about this crisis as an opportunity at a personal level, for personal growth and for comprehension of the goals that we wish to achieve in an investment sense, the easier it will be to bear. And last of all of you, stay safe.
Thank you, Chris. Andreas, last word.
Yeah, I agree with everyone. It's probably a good time now, as one has a little bit more time at hand, to reflect and see how one wants to take his life and business forward. So I think this is a great opportunity, and whatever one likes to do. Also, the markets are very exciting. Who's interested in markets and investments? Everyone on this call, I'm always, and Chris and Samir probably as well, we are always happy to answer any questions offline, right? You can email us. I mean, my email is andreasschwarz@thefuturecapital.com. You can email me as well, and yeah, we can take this conversation forward offline if you want to have any ideas or want to see what we are doing currently, because I saw in the questions people asking very specific questions where the opportunities are and what one can do. So yeah, please all feel happy, free to reach out to us. I'm happy to answer any questions or even jump on a phone call to discuss anything you would like to know. So thank you everyone for the call. Thank you, Samir. Thank you, Tatiana, for organizing everything. And yeah, I very much enjoyed it.
Thank you, Andreas, and thank you for this point. So for everyone, for all participants, we will send you the contact details of our panelists in the follow-up email, as well as the link to the YouTube to the current video. Also, to let you know that in 2 weeks we'll have a new panel. It will be a female panel, so just follow us. We will advertise it in LinkedIn and other places. Thank you, Chris. Thank you, Andreas. Thank you, Samir, for co-hosting me today. And thank you very much. Any questions you have, please send it back in the email. Yep. Thank you, and have a good day, everyone.
Thank you, everyone.
Thank you, Tatiana.
Thank you.
Thank you.
Bye-bye.
Bye.